Hello and welcome to the week ahead from the Financial Times in London. Here are some of the big stories we'll be watching this week. Italy goes to the polls in one of the most unpredictable general elections in recent memory. Could the global advertising industry rebound in 2018? We'll be looking for clues when the world's biggest ad group, WPP, reports annual results. And it's a big week for US economic data. First to Italy, which will hold a general election on Sunday. Current polls show a three-way race between a right-wing coalition led by Silvio Berlusconi, the incumbent centre-left led by Matteo Renzi, and the anti-establishment Five Star movement. The outcome could range from a German-style grand coalition or national unity government to a populist takeover by Five Star or the Northern League, or even a stalemate followed by new elections further down the road. Our Rome Bureau Chief James Politi has more.
Italians go to the poll on March 4th in a general election that is the next big political test for the EU as it tries to regroup from Brexit and push for further integration. The most likely outcome is a stalemate between the three main groupings, the centre-left Democratic Party, the anti-establishment Five Star movement, and a resurgent centre-right led by Silvio Berlusconi. But an outright victory for Silvio Berlusconi and his right-wing Eurosceptic allies cannot be ruled out at this stage.
The Italian election campaign has been dominated by Italy's lacklustre economy, which continues to trail the Eurozone average, and also by the wave of migrants arriving on the country's southern shores in recent years. Both factors have put the ruling party under pressure and fueled the opposition. The final week of the race could be crucial in deciding the outcome. More than one-third of voters are undecided, not just about who to vote for, but about whether to vote at all. Now, the cash that big multinationals allocate for advertising and marketing can be seen as a bellwether for the global economy. And WPP Chief Executive Sir Martin Sorrell called 2017 the worst year for the advertising industry in a decade. Big brands are cutting costs, and some are feeling the heat from activist investors to reduce spending on advertising and marketing. Shares in WPP, which is the biggest ad company in the world, slumped last year. And big technology companies like Facebook and Google continue to reshape the advertising industry landscape. But while strong global growth has led some analysts to speculate that 2018 might be a more positive year for ad spending, the picture remains mixed, as our global media editor Daniel Garrahan reports.
It's not as if there's consensus across the research community that advertising is back with a bang, and it clearly isn't. There are big structural questions around how much money Google and Facebook are and the role that they play in advertising now, and at the expense of other media players, and also the structure of agencies, WPP and its competitors, of these very big, complex structures of multiple agencies. And we're hearing from the clients that they want a more simple structure. They want more transparency. They want make it easier to see where the money they're spending is going. So again, we should get a sense of that on Thursday.
And finally to the US, where there's a busy week of economic updates. There are numbers on the manufacturing sector, the housing market, trade and construction spending. At a time when Donald Trump is trying to rewrite America's trade relationship with the rest of the world, the trade data in particular is in focus. The Advanced Trade Balance Report is expected to show a deficit of $72 billion. Financial markets will also be watching construction spending closely, as our US reporter Mamta Badkar explains.
The first up is Advanced Report on International Trade in Goods. That comes as the U.S. trade deficit jumped to its highest level since 2008 in President Trump's first year in office. Of course, this is important as redrawing America's trade relationship with the world has been a crucial part of Mr. Trump's agenda. Another figure markets will be paying attention to is construction spending. Construction spending in 2017 grew at its slowest pace in 6 years. That came as state and local governments reduced spending on highways and waste disposal and roads. Of course, this comes at a time when President Trump has unveiled his infrastructure spending plan that has thus far received a rather cold reception on Wall Street.
And that's what the week ahead looks like from the Financial Times in London. See you again next time.